I'm joined by Professor Charles Goodhart from the London School of Economics. Thanks very much indeed for joining us. We've just today heard the government writing another letter saying about how important all these cuts are in reducing the deficit. Are the austerity measures, is that what's causing the fact that Goldman Sachs is saying that we're doing so well here in the UK? Or does this show that the austerity measures aren't really needed in the first place?
Goldman Sachs has been suggesting that the UK will grow a lot faster than it has for several years now. So, well...
A broken clock, are you suggesting?
A bit. And I think there were one or two special factors in the second quarter. It certainly was much higher than anyone had expected. And it also owed a lot to a surprising jump in public sector construction, perhaps related to a desire to get things on the ground and going before everything gets tightened.
And indeed, of course, it was starting from a fairly low base, that construction figure. Are you one of those who holds the view that this really is a one-off and we're not going to see a repeat of that jump in GDP?
Yes. And I think the idea that we're going to grow at 4% over the next year is fanciful. And I think we're going to go sharply backwards to a rate of growth that will be much lower. I don't think it will be negative, but I think it will be much lower. It's going to be a fairly depressed and slow recovery.
Is this because of the withdrawal of stimulus? I mean, at the moment we're still on the drip.
But remember, it could have been worse if we hadn't. And if we got into a state where the markets really took fright at what was happening in the UK, if we got pushed towards a Greek-type situation, and life would have been terrible.
So the coalition government's approach to austerity is one that you favour?
I think it really had to do it. I was among those who signed a letter in the Sunday Times advocating effectively what occurred, and I still stand by that. But that being said, it will lower the rate of growth in the UK temporarily, even though if the public expenditure cuts are done in the right way, it could raise the underlying sustainable rate of growth over the longer term.
Now, of course, it's a very, very different approach to the one that is being taken in the US. We just heard Ben Bernanke, their Fed chairman, just talking about continuing support there for the US economy. Is it simply that we don't have the same ability to absorb debt the way the US does with their Treasury bills?
I don't think it actually is a very different approach. Remember, Ben Bernanke is talking about monetary ease, and we have done as much monetary easing as the Americans did. The difference is rather more on the fiscal side, where the Americans are thinking of maybe continuing a fiscal stimulus, whereas we have already cut back.
You don't expect to see the Bank of England making any changes to interest rates, presumably this week. But at what point do you think that things will change?
I don't know. It depends on how the economy does. And that, of course, remains very uncertain. And the expectation now is that the economy will begin to recover a bit more strongly and inflation will go down a bit sharper towards the end of next year, 2011. And by 2012, I think that there will be a clear attempt to normalize monetary policy again.
No, we've seen HSBC's banking figures coming out, all very positive. We've got RBS and Lloyds to come. We've also seen Vince Cable and George Osborne talking about how determined they are to make the banks lend to small and medium-sized businesses. How much can they do?
Well, remember that you can't have it both ways. You can't simultaneously tell the banks to reduce risk, to increase the capitalization, to increase the amount of earnings they could put to Tier 1 capital, to reduce leverage and all that, and at the same time lend to everyone. And the banks have got to undertake sensible lending. I agree that everyone is perhaps being a bit overly cautious now, but that actually relates also to the borrowers. And the banks are saying that the borrowers are not there and they're not using the overdraft facilities that are already established. That said, I think that the banks are charging a somewhat higher spread between the deposit rate and the lending rate than would under normal times be desirable. But I'm not sure it's the quantity of lending so much as the margin at which they're trying to lend and their demands for collateral that I would put my finger on.
And just briefly, apart from writing letters and making statements, is there very much that the government can do?
It's got obviously a much greater control over those banks where the government
Banks that it owns.
Well, RBS and Lloyds, yes.
OK, well, thank you very much indeed for joining us today and sharing your insights with us.